Welcome, folks. This is the market review for Euro USD. So today we had, can say we had one setup, but there were almost we had this buy, we had this sell, then we had this buy. So during London we had 3 setups, and also we had this was another setup. So let's start with the London Open kill zone. So during the London Open we had these relative equal highs right here. As you can see, we had that, and also we had this high. So that was the drawn liquidity. So as we were trading to the downside, taking out these lows, and we also traded into the midpoint of these this week, and also we had this inefficiency. So you can extend that through. It is an old inefficiency, but we can always use an old inefficiency. So as we were trading to the downside, this was our entry to the upside, aiming for the buy side that was residing above these highs. So we had that, we rallied up, took out this high, and then moved to the downside, taking out that low during London Open. We had that, and then we had now this aggressive move to the upside, taking out this high, and eventually we have traded into this high. So and also this. So this was the business of today. So if we head over to the 1 minute chart, so we had this, we had exactly at 2. So here we are at exactly at 2. We had these shift, we had this swing high, we had a shift in market structure, and then we had this run to the downside. We had liquidity void right here. So let me delete this. So we had this liquidity void, we traded into that. So that would have been your entry, or anywhere in these in this gap. So we had that, we entered long inside that, and then we anticipated for a run above these relative equal highs right here, and then we had that. It traded above that, then completely reversed. So this was tradable. This was tradable. You could have gone short inside this inversion fair value gap, short right there, then placing a stop just above there, then anticipate for a run below these lows. Also during the New York, the London Open, we had this run to the upside. We had this inversion fair value gap. We had these volume imbalance. You extend that through. As price was hitting that, could be going long right there, placing your stop just below these just below this order block. Place your stop right there, then anticipate for a run above this high. As you can see, we had that. So this was the trade. The trade was to go long on that, placing our stop just below that low, and then aim for this high for our partials. And eventually we had so we had that, Eventually we had this high right here, so we had that as the true liquidity, and as you can see we hit that. So that was a total of how many R? We had a total of 13.17 R. So I actually this was sent to the group, Telegram group. I also executed on the same. Let me show you executions. So as you can see, I executed as this candle was moving to the downside. I executed on that. Then my stop was below this low, and we anticipated for a run. So I took off my positions around this high, and then it continued to move to the upside, and then we had that reverse. So that was a very nice trade. So that was it for today. We had that as the silver bullet right there. This could have also been your trade, and also this sell could have been your trade. So I guess that's it for today. We had that. So if you, let's say, see the 15-minute chart. Here we had this was the New York open kill zone. So we had this inefficiency right there. We had that, extend that through. So we had that. So if you head over to the 1-minute chart, sell side was taken right there. Then we had a shift in market structure. We had a fair value gap, and then that could have been your entry, and we could be aiming for this high right here. So that was a good trade, going long into that, and then anticipating for a run high. So right now you are already taken the buy side that was residing above those highs. We had a shift in market structure, a fair value gap, going short right there, placing a stop right there, and then anticipate for a run into the midpoint of these dealing range. So anticipate for that. So I guess that's it for today, and until I talk to you next time, be safe.